Welcome to Atlanta's Commercial Real Estate Show, brought to you by Bull Realty, the show for property owners and business leaders. Host Michael Bull brings you market analysis, advice, and opportunities around Atlanta.
Okay, so let's talk about, in this segment, on the Atlanta Commercial Real Estate Show and here at Atlanta's Leaders Group, let's just talk about some trends impacting the Atlanta commercial real estate market and some things that you might want to think about moving forward. First of all, I would look at rising interest rates impact on cap rates. If what I'm hearing is the Fed may raise the rate, 3 times this year, maybe 3 times next year. So I think everybody in the room would think rates are going to rise, right? Hopefully the economy's doing well, and that's a good thing. The economy's doing well enough that they're going to rise rates. Well, that will impact the value of commercial real estate. Some sectors more than others, right? So I think you want to think about how that could change. And I'm going to give you an example here. So we've only had one question so far, so we only have one possible winner of the prize pack. So anybody jump in. So look at some cap rate changes. So let's say that we're 2 years from now, and what do you expect interest rates will be? Do you think they'll be 1.5% higher, 2% higher, 1% higher? What do you think? Think about that as you're watching or listening to this. Now think about what the cap rate might be, the change. So let's assume the economy's doing well, there's still strong demand, that everything's great. So the cap rate's not going to change. Let's say interest rates change 2%. It's not going to change 2%. Let's say it only changed 1%. And look at a difference value. So here's a dollar store that Nancy sold. It's sold for a 7 cap at $1.3 million. Now if we only have a 1% change in the cap rate, then the value changes to $1,137,000. That's a $162,000 drop in value if you only look at the cap rate alone. And I think one thing I mentioned earlier is some property types and sectors are going to be impacted more by rate hikes than others. I think single-tenant net lease is one of those. A single-tenant net lease is a nice, safe investment, long-term leases, credit tenants, not a lot of moving parts, a great investment, especially for people who aren't full-time real estate people. Right? You could be anywhere in the world and own the property type. But you have a lot of flat leases. You have some that have no rate increases for 10 or 15 years, some for 5 years. So if there's no rental rate increases, there's a tendency for the cap rate to change more on that sector. So if you own single-tenant net lease properties and you're going to own long-term, all right, you own long-term, you probably don't care. But if you're thinking about something you're going to have to refinance or sell in the next 3, 4, 5 years, this is something you might want to look at rates today and the demand we have today. Let's look at another example. This is a small office building. It's like 45,000 square feet, rents at $28 a foot, and net rents. So let's look at this at a 7 cap at $1,260,000 net operating income. So this is all the income less all expenses, not including the mortgage. This is what it peels off if you pay cash for it, right? And it's a 7% cap rate. It's $18 million. Let's say things are really rosy, the market's really good, there's strong demand for your office building, and so the 2% interest rate change only changes your cap rate by 0.5%. So the cap rate goes to 7.5% from 7. The value change on that NOI would be $1,200,000. Okay? Now let's take another example. Let's say that the cap rate changes by 1%. Interest rates change by 2%. But things are good, your cap rate only changes by 1%. The value change is $2,250,000. I think that's one of the things, if you don't get anything out of this today, if you own or your clients own commercial properties in Metro Atlanta, you want to think about how long you're going to own it. Think about your current financing and when that becomes due, because your values are going to adjust. Now, the cap rates aren't the only thing that changes value, right? Hopefully you have increases in rents and will give you some more improvement in your value. And you'll be capping a different NOI or hopefully a higher NOI. But if you look at just the cap rate change alone, it could be significant. Beware of rental rate shock. We looked at that earlier. I think that's another big thing to be concerned about moving forward is if you have office space in Atlanta and you rented it in the downturn, or you've rented any other time, you're probably not going to see such significant rent increases. And you're going to think, oh, my landlord loves me. They wouldn't raise me that much. Yeah, they are. They're gonna want you to pay market rent, right? They're gonna want you to pay market rent. So here's some things I would do. First of all, I would analyze your office space needs well in advance. What do you need? What's your growth potential going to be? Where should you be? Where's your competition? Where are your employees? What are all the factors that impact your real estate decisions? And get out way ahead. If you have to give 1 year's notice to do a renewal, I would look out, if you have small amount of space, a year in advance of that and start the process. All right, a year ahead. If you have large space, 40, 50,000 square foot plus, you might want to start 2 or 3 years in advance of when you got to give notice. This is where real office tenants really get caught up in a problem area usually, is they start too late. And then when the landlord, they have no other option. If they have a renewal option, they have to take the option to renew. They have no other time to do anything else. They have no time to negotiate or ask for anything. They might have been able to ask for some tenant improvement dollars or some incentives to exercise the renewal. But if the landlord knows you don't really have time to do anything, they're businessmen, you're going to pay the rent, right? And if you don't have an option to renew, then you're going to be subject to the whim of the current market, right? So one of the things I always like to tell tenants or people representing tenants, get all the renewal options you can. Get all the expansion options you can. If you can, lock in the rental rate, not to be determined by the market. But if you're a landlord, I can't stand renewal options that are unilateral to the tenant, that the tenant can decide if they want to renew at a locked-in rate, especially when they're short on the term. So if you're in the landlord business, you own some buildings, and you're doing leases, keep in mind how the option to renew that the tenant has impacts the value of your building, especially before that renewal time. We see it in all the properties we sell, the single tenant and everything else. You get close to that renewal period for a major tenant or a single tenant, and that building's in no man's land. It almost has no value to anyone because until that tenant exercises that renewal option, you don't know if you can sell it to a user because a user might not be able to use it, and you can't sell it to an investor because the investor doesn't know if it's going to have any income, right? So try to get advance notice as much as possible that the tenant has to exercise the renewal. I would say a year minimum. They have to give a year notice minimum to cut down on that period. Also, as you're doing these leases, look at your loans, and if you're lenders, look at the situation in the reverse. But make sure you're not in a position where you've got a balloon coming up and a renewal option and the time frames are problematic for you. Okay. And obviously, lock in long-term rates. I was talking to a lender the other day. He said he could give us a fixed rate, fully amortizing loan at 4.5% for 25 years with no calls and no balloons. And I told my client, go sign it. Go sign it. Because you don't know what's going to happen. How long is this cycle going to last? Is it going to last another 2 years? Is it going to last to 2020? Well, we're at 2017. So if you've got a 5-year call on a note you're doing today, you might be in a terrible economy. You might be in at least an economy that's not as robust as it is now. So I would look at all your loan situations and try to get as long-term as you can, fixed rate as you can right now.
Thanks to our presenting sponsor, Bull Realty, and to all of our sponsors linked below. For more Atlanta forecasts, advice, and opportunities, subscribe on YouTube, iTunes, Google Play, and AtlantaCommercialRealEstateShow.com. And be sure to connect, comment, and share on your favorite social media sites.